class, we talked about Schedule C, which include all the income and loss coming from a business. Like if as a taxpayer you are running some business as a sole proprietor or even a joint venture with your spouse, then you should file your income or loss in the Schedule C. Uh, Next, we discussed about Schedule E, everything about Schedule E, which include rental income and losses, and also the passive activity rules. Then we discussed about flow through entities. How does the flow through entities income and losses are reported in an individual 1040, and their losses limitations also, the tax basis limitation, at risk basis, and passive activity rules also. Then we discussed about some adjustment to the gross income, which include adjustment related to a penalty, like if you have some savings and you are withdrawing it before time and you have paid like penalty on that withdrawings, then these penalty you can take a deduction from your gross income. Also, we discussed about educator expenses. Like if you are an educator, then any unreimbursed educator expenses you can claim in your 1040, but the limitation is $300 for per educator. Then we discussed about student loan interest expense. Like if you have some student loan related interest expense, then up to $2,500 you can deduct in your form 1040. Next, health saving account. So if as an individual taxpayer you have some health saving account or a family plan, then contribution to these plan you can deduct in your 1040. There is some limitations, so we discussed in our last class. Then moving expenses related deduction. So if you are working in a armed forces, then you can uh, deduct your moving expenses in your form 1040. Alimony, I think we already discussed it multiple times. So if you are paying some alimony to your spouse, but divorce should be before 2019, then you can take a deduction for the amount paid. But it if it is after 2019, sorry, after 2018, means pre 2019, then there is not deduction allowed. And also if somebody is receiving the alimony, then he or she has not to pay any tax on the alimony. Child support and property settlement, these are never deductible and never included in the taxable income. Attorney fees paid in discrimination cases. So if you are paying any attorney fees, you can take the deduction in your form 1040. So now today we discussed about IRA in detail. So what is IRA and what are their different types and their contribution limits? So in regulation part, you need not to have a detailed like explanation of IRA, because this part is now shifted to your TCP section, and it comes in detail when you study about TCP paper. But in regulation, it is also included because you can take your deduction if you are contributing to IRA plan, and if you are receiving some distribution, then it is also taxable. So what are IRA? So IRA are basically the retirement plans that that can be taken by an individual. Okay, so in order to have some retirement benefits and all. So basically there are two types of IRA plan. One is traditional IRA and second one is Roth IRA. Traditional IRA and Roth IRA. So what is the difference between both? Traditional IRA, you have deductible contribution, means if you are contributing to traditional IRA, then you can take a deduction in your form 1040 as an above the line deduction. Okay. So if you are taking a deduction, that means if you are gaining some tax benefit, then if in the future, if you are receiving some distribution, then it should be taxable. So yes, in traditional IRA, earning and principal both are the taxable. Okay. But in Roth IRA, if you are contributing to Roth IRA, then it is non-deductible contribution. Means you do not get any you do not get any deduction in your form 1040. And also, if you are receiving the distribution, then it should be tax free. But condition is for the qualified withdrawal. If it is a qualified distribution, then only it is a tax free. But if it is non-qualified distribution, then you have to pay some taxes that we discuss in detail in the below slides. So major difference is traditional IRA, you can get deductible contribution. But in Roth IRA, you do not get any deduction when you are contributing to Roth IRA. But if you are receiving the distribution from traditional IRA, then it is taxable. And if it is from Roth IRA, then it is non-taxable. Is it clear? Is it clear?
Yes,
Yes.
ma'am.
Okay. So, what is the contribution limit? Can an individual contribute how much amount they want? The answer is no. There is a contribution limit. So, it is $7,000. So, if you are an individual and contributing to your IRA, then it is $7,000 per person is a contribution limit. And if you are 50 plus in age, then you can get $1,000 extra limit. Means you can contribute up to $8,000 if you are a person having age 50 plus. Okay. Next is deductibility of traditional IRA contribution. So deduction is basically depend upon participation in employer plan and AGI. So what happen if as an individual you do not have any other IRA plan, means you do not have any employer sponsor plan, because sometimes what happens, when you are working in somewhere in a company, then employer might like create some pension plan for you. So if in case you already have an employer sponsored plan, then there is limit to contribution as well as deduction in the IRA. Okay. So if as an individual, if you do not have any employer sponsor plan, okay, these type of IRA you can get yourself. But if you have already an employer sponsor plan, then uh, you there should be a limitation on contribution as well as deduction. But if there is no employer sponsor plan, then there is no limit uh, for deduction. You can get the whole deduction as you are contributing. Clear? So contribution limit is here, and for deduction limit, it will be depend upon your AGI as well as employer sponsor plan. So if you are a single, you can get the full deduction if your AGI is less than or equal to $77,000. But if your AGI is greater than $77,000 and it is up to $87,000, then it will start phasing out. Means it will start reducing the deduction limit. And if the AGI reaches this amount, then above this amount, the deduction limit is completely phased out. That means you can't deduct any amount that is you are contributing to the IRA. Similarly, this deduction limit is also depend upon filing status. So this is for single, and for married filing jointly, the limit is If your AGI is less than or equal to $123,000, then you can get the full deduction. But if it is more than 123,000 and up to 143,000, then there is a deduction, like phase out in deductions started, and it completely phase out at this limit. And if married filing jointly and spouse covered, means one, actually these two are basically what, कि if as an individual you have some employed sponsor plan and you are filing your filings, you are filing jointly return with your wife, and under this, if you do not have an employed sponsor plan but your spouse is covered under some plan, so this limit is for this criteria. Next, if you are filing as married filing separately, then the partial up to the $10,000, means up to $10,000 you can get the deduction, but above that you do not get any deduction for any contribution. Okay. Next is the timing of contributions. So if you want to have deduction for this year, then you need to contribute this amount by April 15. Okay, that is tax filing deadline. And contribution between January 1 and April 15 can apply to the previous year. As I said, deadline is April 15. So if you want to get the deduction for year 1, then you need to contribute this amount up to the April 15 of year 2. Excess contribution incurs 6% excise tax per year until the withdrawn. Okay, so this is an example given. Suppose if you are a single and you are covered by some employer sponsored plan. Suppose you earns $80,000 and contribute $7,000. So your deduction will start phase out at this limit. Since your AGI is above $77,000, means you have $3,000 ex, uh, of excess AGI. So according to this, your 30% of contribution limit will get phased out. Means you will get only deduction up to this amount. Is it clear or not?
How did you calculate it 30%?
Okay, look, for there is a difference of $10,000 here. Okay, so we will calculate this percentage, like how much excess of AGI we have, and divide by this limit, $10,000, we get the percentage. Okay, so
Got it.
here our AGI is 3,000 more than 77,000. Okay, so that means our excess of AGI is $3,000. Okay, 3,000 divided by this 10,000 limit. We get the 30%. If I do have like pen and paper, I can explain you better. Okay, so look, uh, if it is 77,000, if your AGI is up to 77,000, then no problem, you can get the full deduction. But if your AGI is greater than 77,000, it will start phasing out. Your deduction limit will start phasing out, means decrease होनी शुरू हो जाएगी आपकी जो भी डिडक्शन लिमिट है. डिक्रीज कैसे होगी? Look, here the difference is of 10,000, means जितनी आपकी excess of AGI होगी, that is divided by this 10,000 limit, you will get the percentage of how much phase out is happened. So if you have Your AGI, excess of AGI $3,000, it will be divided by this limit. Here the limit range is $10,000. So you will get the 30%. Okay, 30% of phase out means 30% of this contribution amount you can't deduct in your form 1040, and rest of 70% you can deduct. Is it clear now?
Yes.
Okay, next is spouse IRA. So if you are filing jointly with your spouse, and your spouse is covered under some plan, like John and Sarah file jointly with AGI of this, phase out limit will be given in question, and this part is mainly comes in TCP section. So in REG, they will ask you some basic about this IRA. Okay. So John covered by a plan and Sarah not covered means John has already a employer sponsor plan, and now both of them are contributing to some IRA. Okay, so they have taken two plans. They already have John already have their employer sponsor plan, and now he is taking an IRA plan also. So their AGI limit is this, and phase out limit is given. So out of your 7,000 contribution limits, so deductible portion will depend upon your AGI. So since your AGI is greater than 230,000, so your phase out limit will apply. And since it is 5,000 more than your 230,000, so you will calculate the percentage as 5,000, which is excess of AGI, divided by your range. Range is 10,000. So you will get the 50%. 50% of phase out limit. So that means out of 7,000, 50% will start phasing out, means you can't deduct this portion, and rest of 50% you can deduct in your form 1040. Okay. So if you do not have any other plan, then there is no problem. But if you have any employer sponsor plan, then your deductible portion will depend upon your AGI. Is it clear now?
Yes.
Okay. So withdrawals and penalties. Look, if you are withdrawing it for qualified purposes and your age is 59 and half years and above, so then there is no problem. For traditional IRA, you have to pay taxes, and for Roth IRA, you do not have to pay taxes. But if you are withdrawing it before the age of 59 and half years, and sorry, and you are using it for non-qualified purposes, then you have to pay 10% penalty in addition to the taxation on the distribution. Okay. But in case of Roth IRA, generally it is a tax-free distribution if you are like fulfilling the criteria, that is 59 and half years and 5 years of plan. Like you should there should be 5 years that you are contributing to the plan. then there is no problem. Your distribution is tax free. But in case if you are using it for non qualified purposes and withdrawing it before this age limit, then you also have to pay 10% penalty on the earnings. Okay, this 10% penalty will be applicable on the earning part. So penalty waived for that means if you are withdrawing for these purposes, then no problem. 10% penalty will not apply. Okay, so if you are withdrawing for any home purchase, first time home purchase up to $10,000. If you are withdrawing for paying any higher education cost, for any disability or in case of any death, any medical insurance post unemployment, and substantially equal periodic payment. So if you are withdrawing for these purposes, then no problem, there will be no 10% penalty will apply. Okay, so basically in IRA you have two kinds of plan: traditional IRA and Roth IRA. Okay, so basically traditional IRA, no problem, you can deduct your contribution and pay tax on the distribution. But for Roth IRA, you do not get any deduction for contribution, and thus do not have to pay taxes on the distribution. Generally, this happen. But in case of traditional IRA, if you have some employer sponsor plan also, then this deductible limit will start phasing out and will depend upon your AGI. Okay, so if you have any employer sponsor plan, then this deductible contribution will depend on your AGI and some phase out will comes into play. And for Roth IRA also, if you have any employer sponsor plan, then there will be a limitation on the contribution also. Okay, or it will also depend upon the AGI and employer sponsor plan. Is it clear? And now, if you are withdrawing, so this is for the contribution and deductible portion. Now, if you are withdrawing the IRA, then you have to fulfill some criteria. Like for traditional IRA, age limit should be 59 and a half year. For Roth IRA, again, age limit is apply as well as 5-year criteria will also apply. It means you should have completed 5 years of contributions. Then no problem. Like it will be considered as the qualified distribution, and for traditional IRA you have to pay tax, and for Roth IRA you do not have to pay tax. But in case if you are withdrawing it for before this age and also use it for non qualified purposes, you are using it for non qualified purposes, then you have to pay 10% penalty. Okay, but if you are using for some qualified purposes, then no problem, 10% penalty will not apply. Is it clear now? Any doubt in IRA?
No.
Okay. So next is adjustment for self-employed taxpayers. So if you are a self-employed, then you have to pay taxes like self-employment taxes, but you can get the deduction for these taxes also. Like 50% of taxes you are paying, you can get the deduction from your gross income. Okay, so this 50% is calculated upon the net earnings. Okay, so major self-employment adjustment is if you are paying self-employment taxes, then you can get the 50% deduction. If you are a self-employed and you are paying some premium on your health insurance, then you can get the 100% deduction. Okay. And if you're contributing to some retirement plans, like if you are a self-employed person and you have some retirement plans, then also for this retirement plan, you can get the deduction for the contributions. Okay, so coming to the self-employment tax part. So self-employment tax is include your two parts, like first is for social security and second one is for Medicare. So overall it is 15.3%, 12.4% on the social security and 2.9% tax on your Medicare. Okay. But if in case your AGI is greater than these limit, then you have to pay some additional taxes like 0.9%. It is for the Medicare. Okay. So under this, you are paying your employer as well as employee taxes. That means you can get the 50% of deduction in your form 1040. So these 50% is calculated on the net earnings of the self-employed person. Okay. Suppose if you have some earnings like $100,000 of earnings, then this $100,000 of earning you have to pay self-employment taxes, which comes this amount. And deduction is for 50%, means half of the amount you can claim as a deduction in your form 1040. Is it clear? Self-employment taxes. You need to remember that these self-employment taxes is calculated on the net earnings part. Net earnings means कि, your self-employment income is this, and this is a self-employment tax if you calculate. But this amount will you will get the deduction. That means your net self earnings becomes $100,000 minus 7650. So after subtracting these amount, these deduction, you can get the net self earning, net earnings from self employment. So in actual, you will pay tax on this net earnings. Next is if you are a self-employed person and you have some health insurance plan, then you can get the 100% of deduction of premium you are paying to this plan. Also, if you have some retirement plan like SEP IRA, simple IRA, or Cure plan, then you can get the deduction for any contribution to this plan. Okay. Any doubt till here?
No.
So this is all about your gross income and deductions from your gross income. Have you studied itemized deduction also? Like, have you done the revision for itemized deduction? Have you revised the topic itemized deduction?
Mm, no.
क्या?
Not revised.
You both are going to give your exam in next month, right?
Yes, ma'am.
So we have not covered single unit yet. So please revise the topic itemized deduction for tomorrow. We will discuss some questions and some, like, first overview of itemized deduction. Next we discuss some questions related to itemized deduction. Okay.
Okay, ma'am.
Okay.
Okay. So here are some questions. First question is, Nan, a cash basis taxpayer borrowed money from a bank and signed a 10-year interest bearing note on business property. On January 1 of current year, the cash flow from Nan's business enabled Nan to prepay the first 3 years of interest attributable to the note on December 31 of current year. Means you have prepaid interest. And how should Nan treat the prepayment of interest for tax purposes? So if you are paying some interest, like if you have some prepaid interest, what should be the uh, adjustment for tax purposes? So what should be the right answer? So will you capitalize this interest and amortize for 10 years? Or you will capitalize this interest as the part of basis of business property? Or you will deduct the current year interest and amortize the balance over next 2 years? Or deduct the entire amount as a current expense? So what will you do if you have some prepaid interest?
Ma'am, C option.
Yeah, option C.
Yes, right. So for prepaid interest, you can only deduct the amount of interest that is applicable to the current year, and rest of the amount you need to deduct in the year in which you actually incurred it. Okay. So correct answer should be C. Next question. Barclay owns a vacation cabin that was rented to unrelated party for 10 days during the year for $2,500. The cabin was personally used by Barclay for 3 months and left vacant for rest of the year. So expenses for the cabin are as follows. How much rental income and loss is included in adjusted gross income? So you are giving a cabin for rent only for 10 days and using for personal use for 3 months, and rest of the year it is vacant. So how will you, like, treat these expenses in your tax return?
Ma'am, 0.
Yes, other one. Okay, if you are renting it for only for 10 days, that is less than 14 days, then this income will not be considered in your Schedule E. That means it is not considered as your rental part. This you can't deduct any expenses related to the rent. Okay. So you have to tell how much rental income and loss is included in your AGI. So no rental income you will include. Okay, because you are renting it for only for 10 days. Clear?
Yes.
Okay, next question. In the current year, Mike and Jane Smith, both 35-year-old, are filing a joint income tax return. Mike earned $40,000 in wages and was covered by his employer's qualified retirement plan. So wages are given, and also given that the Mike is covered by the employer sponsor plan. Jane was employed part-time and received $10,000 in wages. That means their combined AGI is 50,000. Each contributed 5,000 to traditional IRA. So you have to tell the allowable IRA deduction on their current year joint income tax return. Okay, since the Jane already has a employer, sorry, Mike already has a employer sponsor plan. So that means if the taxpayer is filing married filing jointly and he already has some employer sponsor plan and want to contribute to IRA also, then in that case deductible contribution, there should be a limit and will depend upon their AGI. So since for married filing jointly the limit was, it will be given in question. Okay, so the limit was this: less than 123,000, then no problem, whole amount is deductible. So in the question, their combined income is 40 plus 10, $50,000. So is it more than the limitation or less than?
Less than.
Yes. So that means they can get the whole deduction for their contribution. So each one is contributing $5,000 to their IRA. That means they both are contributing five overall $10,000, and their AGI is less than the limit, so they can get the whole deduction. Okay, clear or not?
Clear.
Okay, next question. An individual taxpayer taking the standard deduction on Form 1040, individual tax return is the sole proprietor of a service business with no employees. The taxpayer paid 7,000 in self-employment taxes. So what is the amount that can be deductible by the taxpayer? So self-employment taxes, how much amount you can get the deduction?
5%.
How much?
It's 15.3%.
No, that was for calculating taxes. They are asking how much deduction you can get if you are paying self-employment taxes.
50%.
Yes, for self-employment taxes, you can get the 50% of deduction. So that means for 7,000, how much deduction you can get?
3,500.
2,500.
Yes, right. Okay. So right answer should be 3,500. Okay, next question. Janice loves to make handmade quilts as a hobby. She primarily makes quilt as gift for friend and families and contribute to charities for fundraiser. But occasionally she get paid for making a custom quilt. In the current year, she received $200 for a custom quilt sale and had the following expenses. So it is related to your hobby. So if you are earning something and this is expenses related to the your activity. Material supply, quilt show expenses. So how much amount, what is the amount of Jenai's taxable quilting income and loss for the current year?
Ma'am, B option, zero profit and loss.
And next, other one?
Option D.
Yes, option D. Okay. Since it is given that she is doing this activity as a hobby, that means her major purpose is not a profit. In that case, she cannot deduct any expenses because it is not a kind of business for her. So the income will be taxable, but the expenses will not be deductible. So that means her taxable income should be $200. Next question. Larry collect and restore antique car as a hobby. Larry work full time but spend most evening working on his antique car and nearly every weekend participating in classic collector shows, car shows. He has spent all the car as she restored, although he has occasionally donated a restored car to a charity for auction. This year, Larry won a $2,500 Best of Show award at one of the car shows. So, in the current year, he had the following expenses. So, you have to tell what is the amount of taxable income related to his antique car activity for the current year. So, it is again is a hobby, okay, and Larry is earning something, and these are expenses related to the activity. So, what should be the taxable income? I think this question is same as previous one. So, since he is involved in a hobby, that means his main motive is not a profit. Like it is not a kind of business activity for him. That means he can't deduct any expenses in his form 1040. So, what should be the amount of taxable income?
Option D, 2,500.
Yes, correct. Option B, option D, $2,500. Next is which of the following is a deduction for AGI? So, from AGI, what you can deduct? Any mortgage interest, charitable contribution, alimony paid pursuant to a 2017 divorce agreement, or state income taxes. They are asking for what should be the above the line deduction. So they are asking for what is the deduction for AGI, means what should be the above the line deduction in this case.
Option A.
Mortgage interest.
Ma'am, option C.
Yes, correct. Option C. Because mortgage interest, charitable contribution, and state income taxes, these are taken as deduction as itemized deduction. Like it will be deducted from AGI, not for AGI. But alimony you can deduct from your gross income directly. That means it is a above the line deduction for the AGI. So correct answer should be alimony. Any doubt?
No, ma'am.
Next is Brianna has various items of income as follows. So she is getting W2 wages, interest and dividend, sole proprietorship income on Schedule C, income from S corporation from Schedule K1, income as a limited partner from limited partnership from Schedule K1. So for purposes of self-employment taxes, what are the net earning from self-employment? So, for purposes of self employment taxes, what should be the net earnings?
Ma'am, can you show the above amounts?
Yes. They are not asking they are not asking after 92.35% calculation, means not after deducting your self employment deduction. They are asking before this deduction. So you need only need to tell what is the amount that is subject to self employment taxes.
Ma'am, D option last.
Okay, other one?
C.
Yes, correct. So you need to pay taxes on the any business if you are doing like as a sole proprietorship. So if you are getting any income from sole proprietorship, then you need to pay the self employment taxes. Also, if you are a general partner, then you need to pay self employment taxes. Since in this case you are a limited partner, then you need not to pay the self employment taxes on this partnership income. Okay. Okay, the next question is uh, include actual date that must be used to determine the appropriate tax treatment. Jake and his wife were divorced in 2018, and Jake pays the following amount to his former spouse during the current year. So in the current year, he is paying some amount to his spouse, and Divorce was uh, divorce was in 2018. So you need to tell what amount can be taken as deduction.
Regular alimony payments, 12,000.
Okay. Yes, correct. Okay, since the divorce is in 2018, that means you can get the deduction for the alimony. Rest of these child support and property settlement are not taken as deduction. It means right answer should be $12,000. Okay.
Okay.
Any doubt?
No, ma'am.
Next pack has various items of income as follows: W2 wages, interest and dividend, sole proprietorship income, income from S corporation, and income from general partnership. Okay, this question is very similar, but there is only a one difference. You need to tell how much earnings will be subject to self employment taxes. I think I already explained this to you. How much earning will be subject to self employment taxes?
Show the
Option
option. Ma'am, option A.
Okay, next, other one, Dhanashri.
it's option C 22.
Okay. So, which income will be subject to self employment taxes? Out of these income, W2 wages, do you pay any self employment tax on this?
No, ma'am.
No,
Interest and dividend,
no,
No.
sole proprietorship?
no.
Yes.
Yes. So, it is a business activity for you. So, you are self employed here, you have a sole proprietorship. So, you have to pay taxes on this. From flow through entities, you need not to pay self employment tax, but if you are a general partner, you have to pay self employment taxes. So that means 8,000 and 10,000, 18,000 will be subject to the self employment taxes. Previous question was same, but only difference was you were a limited partner in that question. Okay, so if you are a limited partner, you need not to pay taxes. But if you are a general partner, then you have to pay the self employment taxes. Okay. Any doubt in this question?
No.
No, ma'am.
An individual start paying student loan interest in the current year. How many years may an individual deduct a portion of student loan interest? So for how many years you can get the deduction?
Option D duration of time that interest is paid.
Yes, correct. So there is no limitation as such. You can get the deduction as much of the time you are paying the interest. Okay, so rest of the portion we will discuss in the next class.
Okay.
Okay, so you have to revise the next topic, that is itemized deduction.
Yes, ma'am.
Yes.
Okay, then I will stop the class here. Okay, bye everyone.
Bye bye.
Thank
Thank
you.
you.
Bye.
Okay, bye.